If you're working hard and still watching a big part of your income disappear to taxes, this video is for you. You might think taxes are unavoidable, but that belief is costing you far more than you realize. The truth is, many wealthy individuals don't evade taxes. They legally structure their money differently. In this video, I'll break down how taxes can be avoided legally and what you can start doing today. Ever wonder why you work your butt off, pay your taxes, and the rich publicly say they don't pay a dime? People like Robert Kiyosaki, Donald Trump, even Warren Buffett, they've all openly talked about paying less in taxes. And you're probably thinking, wait, aren't taxes mandatory? Isn't avoiding them illegal? Well, yes, but here's the catch. There's a huge difference between tax evasion, which is illegal, and tax avoidance, which is completely legal. Today, we'll break it all down with examples so clear you'll feel like a financial Sherlock Holmes. Funny thing is, schools don't teach taxes, so the first time most people learn about them is when they get their first paycheck and realize it's smaller than expected. And that moment alone causes more panic than it should. Here's the truth. If you make money, the government wants a cut. The IRS doesn't care how much you earn. They care how much you keep as taxable income. You could make $100,000 and only be taxed on $60,000. Same salary, lower taxes. That's it. That's the entire system. You earn money from January to December, and you settle things by April the following year, usually around 10 to 20%. No math required, no spreadsheet, no crying. If you made $500 mowing lawns for your neighbor, congratulations, you're free. But if you had an actual job, yes, you owe taxes. Now here's the part nobody tells you. Most jobs pay your taxes for you automatically. Your employer takes a portion of each paycheck and sends it straight to the government. You never see it, you never touch it. It disappears like magic. This is why most people don't feel like they're paying taxes during the year. So if you make $50,000 a year and your tax rate is 10%, $5,000 is already gone, which is annoying but also extremely convenient. Now, let's try to understand some tax terms. Tax return. This is just the government asking, hey, did we take the right amount? That's it. You upload your forms into a tax website, answer some painfully specific questions, and the website does everything else. Then come deductions. Deductions are things the government says, okay, fine, we won't tax you on that. Medical bills, business expenses, stuff like that. And if you don't qualify for many, no problem. Everyone gets the standard deduction. The software automatically picks whatever saves you more money. You literally cannot mess this part up. After that, the website compares two numbers, how much tax you should have paid versus how much tax you already paid. If you overpaid, you get refunded. If you underpaid, you pay the difference. That's the entire climax of tax season. Now, back to the main juice. The difference between tax evasion, which is illegal, and tax avoidance, which is completely legal. Tax evasion is the stuff that will land you in jail. Basically, it's breaking the law to avoid paying taxes. Here's how it works. Imagine Bob buys a $700,000 house, but reports it as $500,000 to the government. Boom, he pays less tax. Illegal, big fines, possibly jail time. Or, some rich folks used to stash cash in Swiss bank accounts. Why? Swiss banks were like Fort Knox, with a no snitching policy. Government didn't know the money existed. Sneaky and illegal. Today, those banks have to spill the beans. So hiding money like that? Not a good idea. Let's say Sarah owns a pizza shop and spends $3,000 on renovations. But she tells the IRS she spent $30,000. Now she pays less tax and keeps more money. Illegal. Very illegal. Bottom line, don't try this at home. You'll end up on the wrong side of the IRS, and probably the news. Most people live like this. Get paid, pay taxes, spend money. Rich people do this instead. Get paid, spend strategically, pay taxes. That one change? That's everything. Which takes us to the good stuff, tax avoidance. This is legal, smart, and exactly what the rich use. It's like playing chess with the IRS and legally saying, checkmate. Here are the things you need to do to legally and ethically pay less or no tax. 1. Having a pre-tax retirement accounts like a 401k or IRA. This lets you hide money from the IRS legally. Put money in, lower your taxable income. Simple. 2. Debt. Yes, debt. Most people hate debt. The wealthy use it. They borrow against their investments. It's called a securities-backed line of credit. They don't sell stocks. They don't trigger taxes. They borrow. Loans aren't income, so no taxes. Then they invest the borrowed money at a higher return than the interest. That's called interest arbitrage. It's powerful. It's how money multiplies quietly. 3. Dividends and long-term capital gains. Ever wonder why Warren Buffett pays less tax than his secretary? His income comes mostly from dividends and long-term capital gains, taxed at 15%, instead of ordinary income, taxed at 22 to 37%. That's a massive advantage. Hold stocks longer, pay lower taxes, sometimes zero. 4. Side hustles and businesses. The tax code loves one thing: people who don't rely on a paycheck. Side hustles, freelancers, business owners. Business expenses reduce your taxable income. Why? Because businesses get deductions. Home office? Deduct it. Laptop? Deduct it. Wi-Fi? Deduct it. Education? Deduct it. Your expenses become tax weapons. Employees pay taxes first. Business owners pay taxes last. 5. Transfer pricing. Big companies move profits between subsidiaries in different countries. How? By charging for patents or services. Example: Wee Wee Shoes sells a product in the US, but pays a Cayman Islands subsidiary for intellectual property. Result: most profit shows up in a zero-tax country. Money saved? Hundreds of thousands. Legally. 6. Controlled foreign corporations, CFCs. These are companies set up in low-tax countries, also called tax havens. Apple famously did this, setting up shell companies in Ireland to save billions in taxes. Totally legal, because of differences in tax laws between countries. So, taxes aren't complicated, they're just unfamiliar. Once you understand them, they're boring, predictable, and mostly automated. If you can upload documents and answer questions, you can do your own taxes. The same way you can subscribe to this channel and turn on notification so as to learn more valuable tips on how to evade unnecessary expenses. Congratulations, you are now ahead of most adults.